Joining us now with advice on how to help protect your assets from the ripple effect of the financial crisis is Aftershock co-author and Moneynews contributor Robert Wiedemer. Nice to have you with us, Bob.
Good to be here, Ashley.
Some are suggesting the Mideast crisis may drive oil prices $400 a barrel. Now, $15 a gallon at the gas pump. Not out of the question if this happens. What happens if oil goes through the roof?
Well, obviously it's a huge problem because gasoline goes in everything, diesel fuel, aviation fuel. The airlines are especially vulnerable actually to this kind of problem, but it hurts consumers, and right now we had a little bit of an increase in consumer spending. If prices went that high, you'd obviously see a decrease in consumer spending. That money would be flowing out of the country rather than to internally. So it'd be a real problem for almost every sector of the economy.
And would probably destroy any recovery from this recession.
I think it certainly would, because the recovery has not been that strong, so it doesn't take much to push it back down. I mean, we still have housing completely in the hole. We're really getting a little bit of extra consumer spending, and that's what would be hurt the most by a gas price increase.
All right, as a safe haven from the Mideast turmoil, gold continues to rise, and silver is breaking records. Now, is that likely to continue, do you think?
I think it is. Now, there's always a short term and a long term when you're looking at those things, and I think short term, silver's gone up a lot. Maybe if this crisis settles down in Libya or whatever, silver might pull back a bit. It's been more volatile than gold. But I still think long term, the trends are very much in favor of gold and silver, because I think we're heading into a period of higher inflation, clearly some instability ahead, and clearly some maybe less support for the dollar. So all of those things I think bode well for gold and silver, and as well as who knows what other black swan in the Middle East or in Europe or elsewhere might pop up.
You've warned in the past of 10% inflation. The government says it remains low, but food and commodities prices, they're going up. They suggest otherwise. What's your take on it?
Well, it's interesting. A group called Shadow Stats just released some figures the other day that basically said if we calculated the CPI, the Consumer Price Index, the same way we did almost 20 years ago, before Alan Greenspan made a huge change in the way it was calculated, inflation would be running about 6% right now. So that might give you a better idea of what inflation's really like. And again, I think we're simply on the way, or on the road, as I say, on the road to 10%. But I think 6% already, and certainly heading towards 10.
You already mentioned housing, but noted economist Robert Shiller sees housing prices falling substantially from where they already are now. How far down have they sunk? He sees it going even worse. How long can we go, and for how long?
Well, I think what Shiller was saying is anywhere from 15 to 25% drop in 2011. I think 25% is probably on the high end, but what he's worried about is when interest rates increase, that puts pressure on housing. I'll give you a quick rule of thumb. For every percentage point that the interest rate increases, say above from 4 to 5 or 5 to 6, the values of a house has to go down about 10% to keep your mortgage payment the same. So, so a 2% increase in interest rates, mortgage interest rates, could have a pretty dramatic effect on housing. And I think that could happen. I think that will happen, maybe not this year, but it certainly will happen over the next couple of years. So yes, we're going to see continued declines in housing, primarily because of interest rates, but also because prices are going down.
How big of a factor is the housing crisis in the overall economic picture?
Oh, I think it's huge. I mean, housing is not only construction, but housing drives a lot of jobs in finance, obviously in transactions, but it drives a tremendous number of purchases of household goods, furniture, appliances. Surprisingly, it actually drives a certain amount of car purchases, which would be kind of counterintuitive, but it does. So it's tremendously important in terms of driving our overall economy. And also, when people sell their homes, they often can cash out of a certain amount of equity, and that equity is sometimes spent in the process. So it's very, very important.
How can investors prepare their portfolio with the expectation that the 2-year extension of the Bush tax cuts will not be renewed?
Well, you're going to get hit by, if you have higher taxes, you're going to get hit by from higher taxes almost no matter what. Now, you could say go into tax covered investments like municipal bonds, but I'm not a big fan of municipal bonds right now, and neither are a lot of people. So I think the best way is maybe make some money now and just be prepared for the future, and you're going to have to pay some taxes. That's unfortunate. I think there'll be a down factor on the market. But in terms of preparation, I don't have a perfect answer, because the normal preparation is municipal bonds, and I'm not particularly recommending those right now.
Okay, let's run through investments and give us your quick one-sentence take on these. The stock market's been in a short-term rally. Retail sales are up. Is this a full recovery or a sucker's rally?
It's a sucker's rally. And the reason is just what you mentioned a moment ago. Housing is still tremendously in the doldrums. In fact, the figures just came out on January. 19,000 new homes sold in the entire country for that month, the lowest ever on record. So we've got a fundamental problem with housing. We've got a fundamental problem with construction everywhere. How many new retail centers do you see going up? How many new hotels? How many new offices? And if you're not building those retail centers and hotels, you're not creating the service jobs that drive this economy.
Government and corporate bonds.
Potentially good for a while. I think if Ben's going to keep printing money, he's going to try to maintain the value of bonds, trying to keep the interest rates low. But longer term, inflation's going to take over, and inflation's going to take control of interest rates away from the Fed. So good short term, let's say another 3-6 months, but I keep your finger on the trigger after that.
Emerging markets.
Emerging markets, perhaps they're kind of in a bubble right now, in the same sense that our stock market's in a bubble. Could continue for a while longer. Although let's face it, one of the biggest, China's had a lot of problems. Shanghai market has not done well the last year and a half. And even the Indian market's gone down recently. But could it pop back up and run for a little while longer? Yes. Longer term, I think the emerging markets are going to get hit because I think China's economy is going to get hit. They're really being driven by a construction bubble, driven by printed money on their part. When that construction bubble pops, China's economy will start to pop. I think that's going to put pressure on the whole emerging market mania we've seen over the last couple of years.
And what are you investing your money in right now?
I still have my money in gold. I think that's still a great investment. I'm starting to do some options, long-term options.
How high do you think gold could possibly go?
How high? I said in my book that if I said exactly how high it would go, I'd lose all credibility. But let me give you a quick example. Gold's up 400% in the last 10 years, right? And that's in a pretty negative environment for gold. And what I mean by that is low inflation, a relatively stable U.S. currency. Yes, it's gone down, but it's been stable. Stocks and bonds have performed okay. Going forward, I think we're going to see high inflation, a less stable dollar. I don't think stocks and bonds will do as well. If they could go up 400% in a negative market for gold, could it go up another 400% in a positive environment for gold? Yes.
Bob Wiedemer, always a pleasure to see you, sir. Thanks for your insight. Appreciate
Ashley,
it.
great seeing you.
And thank you for watching Money News.